morning, warriors. I was speaking silently with the mute on. How's everyone doing today? Thank you, Stell. Oh, thank you, Blake. I'm just a mute. How's everyone doing? It is Turnaround Tuesday, and I find myself hunting for trades. Okay, no matter how long you do it, that thought's still going to come into your head. I got to find something to do. I'm going to have hundreds of people in the room and I don't see anything for Turnaround Tuesday. They'll think I'm on strike because I said that last week. I'm not on strike. But at the same time, I'm not going to force anything just to entertain you. I'd rather have you be bored than make low quality, low probability trading suggestions. Everyone with me? So I have to fight that urge. I'm sure who feels that urge at times? You might be flat the market and you're saying to yourself, I got to find my next trade. Well, you know what? Your next trade is going to hit you right in the face. Oh, everyone just wants me to sing. I'm retired. My Elvis impersonating days, I let go of them. Thank you, though, Forex Gal. But I do see something developing here. People that were in face know I really did start getting constructive the gold, looking for this 1181 for weeks when we were up here, okay, and we got it. And then I talked about I don't think that the bears defending this area, they're going to be successful, based on the COT, and this was taking too long for the market and thought we'd have an ABC, and this was a $65 move. Let's see, or 55, what was it, 1160, 55. So we're already very close to equality would be 35, which we almost got to. High was 2033, so I mean almost there. And up until today, I've seen no reason why this rally might be getting closer to being over, but now I see one. Everyone see this? What kind of high is that? It's a confirmed high? Right, correct. Consolidation, new high. What kind of high is this? It's a non-confirmation, but still lots of momentum at 78, right? We're moving sideways. And, if we make a move up here, I know some people are looking for mid 1240s. I know Greg has said, as a trader that we could be, getting close to where this bear market rally might terminate, looking at the weekly. Look at that right there at the 50-week moving average, right? The 200's up at 280. So if not to look to be short, and I'm not there yet, at least a reason to be booking profits. Everyone with me? So if you're long gold, you get one more shot to new highs. On the 1 hour, I don't think we'll confirm. And in fact, there's probably a chance we're at 56, 58 now, that if we rallied, say, another $5 or so up to 34, which would be the equality target, that we're not going to take out 70. So start to be careful with your gold longs up here. Everyone with me on that? Silver beginning to outperform, which is the first day in a while. Silver hasn't made a new high for quite some time. I caught this and, I got out at 85 on some stuff. And, gold has way surpassed this high and silver hasn't yet. So it's trying to play some catch up. But look at this, we're not confirming at this high either. So tempted to do something here in the metals in the next 24 hours. I'll wait to see where silver's at when gold makes its third drive. So sometimes you could use a market that you have a clear technical view on, that once it achieves what you think it will, that's the time to maybe short the weaker sister, the weaker pair. Okay, so I'd be careful being long silver up here, at least for a pullback to 1450. So you would think that might, you know, set up the dollar, but you know, the majors right now, you know, over the last, I don't know, week and a half or two, you know, I mean, why doesn't it just break down already under 95? You know, I thought we'd have that, you know, yesterday or today. It's trying. Maybe it's going to do it, but I have a hard time just launching a short at 95 with it sitting here all day. We do have a special surprise. Greg is going to make an encore performance here. But before I pass it to Blake, you guys have to do this. Okay, you got to sign up, take the trial, have a dashboard. You don't want to drive and try and navigate the markets without a dashboard. Here it is. Here's everything, all the different looks. Euro USD, this looks like basic technical from Blake, and he's pointing out the 38%. You know, you guys also want to be in the members chat room. Also have access to Paulie's European crossover. So, you know, FACE is just the tip of the iceberg. These markets are getting difficult with some volatility starting to come into the markets. I mean, you look at the S&Ps and everything, the way they closed yesterday. And, you know, if you left yesterday afternoon, I don't think you would have been looking for 18 higher in the S&Ps. The way we closed, here's your daily yesterday, right? Pretty lousy close. Sure looked like it could have been imminent for a retest of last week's lows. Now it's giving the bulls hope. I'm happy about it, not because I bought it, but I'm flat. So I may be talking my position, but I think there's going to be a pretty good rally to sell in the next week or so. So, you know, have your fibs up. I really think NASDAQ's still the weak sister. All right. I would love an opportunity up here around 7,300 to 74. What makes me think that there might be a chance is, you know, one of the stalwarts in the NASDAQ 100, and I'm going to turn it over to Blake, has been Apple, and it got crushed. There was some bad news yesterday in Apple. But, you know, when I look at this chart here, the daily, something's missing. Anyone know what's missing here on the Apple chart? Anyone want to take a guess? Maybe. Yeah, Marius got it. Marius got it. Congrats, Marius. Yeah. So, I mean, don't you guys think that if we get a third drive in Apple to new highs, that may set up, you know, that's not going to be a buy signal for Apple. And Apple is one of the strongest ones left in the fangs. In fact, it's the last man standing. So Microsoft is taking bigger hits. We all know about Amazon. So Apple making a new high, maybe Netflix gets good earnings today. Looking for a rally to sell there. So with all my talk, you know, be careful with gold longs. All right. And there might be a short setting up there at the third drive, non-confirmation. It could be silver. And one last thing, I always find one last thing. So yesterday I was talking about, thought the yen would rally because before the close in equities, I thought what's happening today was beginning from Friday. Yen held where it had to. Okay. Oops. Having trouble with my mouse here. Okay. Had nice divergence down here. I just wasn't getting the action I wanted to see, but you know, we are coming out of here above this. I think the lows are in for a rally to 1280. I was buying it here at 85 and 90, and I just didn't like the action. I got flat, then saw it turn up without me. So maybe we just get a pullback to 80. And Joe made a call on a very prestigious Real Vision TV. Our own Joe was on it, recorded, and he talked about a pop towards 113 in the end to establish position shorts. And, you know, I think that's possible. You know, we've broken 300 points, right, from here to here. So, you know, halfway back takes you there, 1303. And then the 108 level that everyone's talking about, if you get a fib extension of this from 113, that's going to take you down to 108. Okay, I know that's a lot of the bear's targets. But in the meantime, I think there is a pop up here. Hard to be patient, at least for me lately. So Blake, what's up, buddy? Dollar still in a tight range. We're going to break down today.
You know,
or break out.
I don't know. I mean, you know, well, if you're trading the euro, it's been a very, very difficult you know, play. And this is something that I've been alluding to for the last couple weeks in the euro is just, I really have no clear direction as far as what to do with the euro dollar. I mean, I look at it and I'm like, yeah, there's nothing really to do. And then, you know, the cable's getting a little lift, you know, with the headlines, but there's no news, and it looks like there's still going to be, you know, some negotiating going on. Barnier just, you know, he just said that there are a lot of open issues related to the Irish border. So, you know, but the cable is still looking relatively strong. We have equity markets that are, you know, they're pushing higher this morning, but we're pushing into the top of the triangle. Nothing, you know, nothing really stands out here. You know, this is one of those, you know, you could look at intraday S&Ps and go, oh man, it's time to get long, you know, or I'm getting squeezed out of my shorts, but really we're not going anywhere. We're just, you know, we're just bouncing around. So I think that that we still have to keep an eye on equities. I know you say it's turnaround Tuesday, and turnaround Tuesday, well, it's Tuesday. Maybe we do get some volatility here. And one of the things that if you're looking at triangles, like we see them here, they tend to be continuation patterns. So being at the upper end of this you know, triangle, I'd be more apt to continue to think that this might be a short up here, you know, on the S&Ps. But, you know, you have the NASDAQ that's also, you know, it's trying to break higher a little bit on the NASDAQ, you know, trying to get a little bit of a lift. But, you know, overall, you know, the markets are really just kind of quiet. Now, we did have a push higher in the Kiwi, and you can see the New Zealand dollar. It's actually it pushed higher because of the inflation data. But man, I'm really just hoping for the Kiwi to move to to 66 cents, because it moves to 66 cents or just up here around, you know, 66 you know, 15 or something. I'm looking to lay into it on the short side. I've been hoping it was. I actually have an order out. Let's see, my order is at 66.07. It's been there all night, actually since yesterday. Whoops. But we haven't got up there yet, and we failed to actually even take out the spike highs from overnight. So we're struggling here at the 618. You know, maybe that is what actually ends up, you know, capping the market. You know, we'll see. So, you know, like I said, I'm not overly excited about the market at this point. I think that the market can, you know, potentially stretch a little bit higher. Like, you know, if you take the S&P, we can get a little bit higher, but you know, all in all, you know, as far as the dollar goes, there's really not a whole lot to do. You know, you got the dollar Canadian. Oh, the dollar Canadian just hit new trend lines. But look, we're testing this. You know, this is the broken trend line. We actually bounced off it pretty aggressive. Oops, I didn't mean to do that. Sorry. Let me refresh that. Sorry. These alarms go a little jacked up when that happens. Let me get rid of that because I made an adjustment there.
I think Joe's call on Real Vision may work out by the end of the week. What do you think?
With the dollar yen, well,
yeah.
You know, the dollar yen is pushing right up against this downtrend line, so we're basically, you know, knocking our head up against here. I had an order and I canceled it at 112.18, and we went to 112.16 overnight, and we're back up at the highs. And I sold a little bit this morning at 03. So, you know, I'm hoping we don't, you know, start to make our way up there. But, you know, with equities pushing higher, we might brush new highs. We might actually just, you know, squeeze a little bit here above 112.20. But overall, I'm eventually expecting a break below here. But we are getting, you know, we have to break below this 111.62 in order for it to really start to break down. But it's possible. I mean, it's possible that we make our way back.
Yeah, I mean, we had a 300 pip decline. Why not some type of fib retracement of that? Even 120 points, 38%.
Well, in order for that to happen, we do have to have, in my opinion, we're going to have to have that. You make our way up to 2,800. And is it possible? Sure, it's possible. You know,
I didn't think it would be yesterday. I mean, the close, I got out of my yen longs because of how the market closed.
Yeah, we closed right on the lows. Yeah. We closed. Tough. It's challenging. I mean, we closed right on the lows. And then,
is that a close you would buy?
No, but it shook everybody out right at the end of the day. And, you know, and again, I think you got to take you got to really see some guidance here in the S&P in order for us to really make some good decisions as far as currencies go. And you know,
Great review, Blake.
What's that?
Great review, Blake.
Well, you know, it's just
you feel like me. I mean, you don't see that much.
No, there isn't. I mean,
you feel the pressure to see something, you know, where you're out there hunting for.
I mean, trade. other than I have to make a living. I mean,
that's no pressure, man.
People think that, you know, look, I trade for a living. ForexAnalytix, I don't.
It's your hobby.
Yeah, hobby. Not a hobby. It's more of a, you know, I built it more than a hobby. That's for damn sure. I put in a lot of hours in this hobby every day.
The most time-consuming hobby you've ever had in your life.
It is, but you know, we continue to grow as a company because, you know, myself and the other partners, we don't take money out of the company. We just roll it back into the company. But you know, I have to make my money trading the markets. That's why I trade for Gelos out of Connecticut. And so am I forced to find something to do? I feel like it sometimes because I need to make money, but when there's nothing to be had, you know, you have to be patient, and you got to take the big swipes when you see them. And right now I don't see anything to do. And you know, I left this trade on the table yesterday. I'm a little irritated that I didn't buy the New Zealand yen, but I was going to get long, and then once the New Zealand CPI came out and we blasted, you know, we blasted 50 pips. I couldn't chase it up there. And then I should have bought it last night is what I should have done. I'm like, do I really want to hold a position while I'm sleeping overnight? You know, unsure about risk appetite because, you know, obviously the New Zealand yen is going to be affected a little bit by the by equities. And I was worried, well, if you saw the close yesterday.
Yeah.
So I was like, well, if equities, you know, if I get up in the morning and the S&P is down 30 points, I'm going to be, you know, really, irritated that I got long the New Zealand yen, so I just left it alone. But that was actually,
isn't trading a little bit like golf? You know, the agitation sometimes you could feel on the golf course.
I have a love-hate relationship with the game of golf. Yes.
Yeah, you know, the would've, could've, should've's, all of that stuff. You know.
And you know, when I play the game of golf, you know, most of the time I'm running around the course just extremely frustrated, and then I have this like I was on the golf course just, you know, it was a few weeks ago. Actually, it was still really hot here, so it was actually about 6 weeks ago, and you know, I was on 18, and second shot par 4 on 18. And I was just off the green, so I hit a nice drive. It was like 230 yards. It's about my drive is 230, 240, and then I chipped it up, you know, I had like an 8 or 9 iron, and I put it off to the side of the green, you know, and I was so frustrated because it was so hot, and you know, I'm on the side of the green, I'm off the green, you know, in the rough, and then I chipped it in. Hold it out for a birdie, and you know, it was like, you know, and that was like it made my whole day. I was having the most frustrating day in the world, and then that birdie on 18, I just was, oh no, yeah, it was a birdie.
I rest my case.
And yeah, and then I walked away smiling. It's like the same thing with trading. Yeah, I'll sit here extremely frustrated all day, and then all of a sudden I, you know, plow into a huge position into you know, some you know, trade that I, you know, have been waiting for 2 weeks, and then, you know, make my whole, you know, week worth of trading in one trade, and then, you know, I walk away happy, and that is a lot of trading, and you end up doing that. But anyway, you know,
Blake.
Yes, Steve.
Good morning, mate.
Good morning.
Before we leave the Kiwi yen also very early, but potentially even a triple bottom, right? If we zoom out. So I think an interesting proposition all in all.
Yeah, you know, it is
too early, of course.
I actually had somebody, you know, come to me on Twitter and say, and actually he may be listening in right now, and he was talking about this triple bottom, or, you know, just support. But look, I don't look at, let me do some drawing here. So I don't look at this triple bottom until you break up here. So it's not, then it's, you know, then it's
absolutely
okay. But what can happen is you can have eventually what's called a wedge, when you rally, you fail, you rally, you fail, and then you're like, oh, what, quadruple bottom? Oh, look, it's got a quintuplet bottom or whatever, you know, and then, you know, next thing you know, it ends up breaking lower because it just wedges. So
that's what I was mentioning yesterday as well, that, you know, triple bottoms are events that can happen in the market, but we should never forget that they are low probability scenarios. But, you know, it's still a scenario. But in my opinion, the biggest development having to do with Kiwi yesterday was what seems to be a major breakdown that is about to happen in the Aussie Kiwi. So I think we should also keep our eyes there.
Yeah, and I agree with that, because the Aussie New Zealand it really has it had a false breakout of this wedge. See, this is actually a pretty good example of when you can start. This is where you can really get carried away with the triple bottoms and, you know, quadruple bottoms, and, you know, we can end up wedging and then eventually breaking down. So I don't. But yes, if we break down here, that will probably increase the odds of the New Zealand yen rallying up towards this resistance. I would be more, and one of the things you see this big blue line here, that you can't forget that the New Zealand yen's in major breakdown territory, multi-year.
Absolutely.
You're talking from 2011 to today. So it's in a multi-year breakdown. So for me to get carried away looking at this and going, oh, you know, we have a big triple bottom, I'll tell you what, if we got above 75.50, I would be all about buying this thing, but I'm not even thinking about it until we get up here. But it is worth noting. I mean, there's obviously some support down at these levels. And with that being said, I'm going to pass it over to Steve here in just a second. One last thing I do want to mention is gold is hitting highs on the day. Now you got gold that is pushing up into major support. I picked this thing up Friday before, forget what day it is, Friday before I left, and then sold it yesterday morning up here, okay, at 12:30, because I saw the rejection overnight and we came really close to 12:35. Here we are moving back up towards this. Now, the reason why this is a big deal is because if you have gold breaking higher, typically that's bullish the yen. So in other words, if gold goes higher, the yen pairs go down, or the yen gets stronger. So the yen, let's see if I can do this, 6J, I forget what the yen futures are on TradingView, because I know what they are on Bloomberg and Thinkorswim, and somebody might actually be able to help me out. Do you guys know right off the top of your head? 6J, is it 6J? I mean, 6J, no, because this is how I do it in like Bloomberg, but let's see.
E6 says Joe.
Oh, is it E6?
J6.
Oh, no, J6, that's it. Okay, there we go. Yeah. Wish everybody could do a, thanks, Joe. I wish everybody could do a, same type of thing here. Let's delete all the lines. Okay, we did that. Let's get rid of that. Let's go compare GC, gold futures, and you'll see very, very tight correlation between the two. So if gold is rallying, that's typically yen bullish. So that's why you got to pay attention. Gold is going up. It's hard for me to get carried away thinking, oh, the dollar yen is going, let me get rid of that. The dollar yen is going higher. The dollar yen is going to have a hard time going higher if gold is breaking out to the upside. So just think about that when you're trading the dollar yen. Anyway, I'm going to pass it over to you, Steve, and hope you are doing well today. I don't know if Stelios is here. Good morning, Stelios, if you are here. Hey, good morning. How you guys doing?
Good. Steve, before you take over, just a couple of things to note, if I can.
Absolutely, Stelio. Of course.
Okay.
To make sure you visit our sponsors.
That too, actually. Okay, so what was I going to say now? I lost my. Oh yeah. So we had three little things, economic data coming out. Actually, we don't have any data right now, do we? In 50 seconds?
No, nothing important coming up. Nothing important.
It's Canadian, okay. So we had the New Zealand CPI coming in at 1.9% year on year. Actually, another country running close to the magic 2%, after the US, EU, and the UK is way above. So this is the theme of inflation grinding higher globally. It continues. We have oil higher as well. That definitely helps a lot. So that's why, like Blake correctly said, the Kiwi has been appreciating. We also had the UK average earnings index, which is very important, and the Bank of England, we've said this before many times, the Bank of England, they look at this compared with the inflation rate, and it depends if it's a squeeze or not on the consumer. As it happens, it's 2.7% year on year for earnings, 2.5% year on year for inflation. So no, it's good news.
So if only inflation was actually 2.5%, that would have been good news, yes.
Yeah, that's another story. You're absolutely right. We can talk for hours about that. But, given the numbers they actually look at, it's looking like it's good for the UK so far. Employment actually dropped a little bit, but we're near record highs in terms of employment. So 10, 20K here or there will not make any difference whatsoever. And the other thing that we had was the ZEW, both for Germany and the European Union, and they were pretty bad numbers, And this, for people who don't know, it's It's an economic sentiment index that shows 6-month economic outlook, and it's a survey from institutional investors. And the German ZEW came in at nearly -25. So my negative number means it's a negative outlook, positive number means it's positive. And that was very negative for Euro and Germany in particular. So that's another reason why, the euro is not doing that much today, but it's definitely not good for the euro. So just
and ZW is considered still a forward-looking indicator, right? Because it is, correct, as you very well said, from institutional investors, which theoretically speaking are always looking forward. It's not like consumer index, which is more or less backward-looking. Because, for example, a lot of people don't realize, but very, very often, not very often, most usually, just before we get a recession, we get like sentiment indexes of citizens, of consumers being at the peak, right? Because they think that everything is perfect right up until the time that the economy reverses. But when we're talking about sentiment that has to do with institutional investors, they're always looking somewhat more forward.
Absolutely. So and then later today, we've got Jolt's job openings in the US, but that's still in an hour and a half, so nothing right now. So maybe it's
light data today.
Yeah. So it's probably a good time to mention our sponsors as well, Forest Park FX. If you have any questions about brokerage, if you are not happy with the service you're getting, or if you just want somebody to talk to about getting your needs fulfilled in terms of your trading, they're the people to contact. We have a Skype and an email contact, and also
find them in the reimbursement page in our site, and you can have a free conversation with them, and they can guide you regardless of if you want to end up using the services or not. They're extremely useful, and you can go back and even watch our recorded interviews with both Trend and Justice. People always have very interesting questions about them, because they know the ins and outs of how brokerage firms work, of what is in your benefit, etc. So either you end up using the services or not, in which case, if you are a ForexAnalytix client, or if you want to become a ForexAnalytix client, you can even end up subsidizing or even fully your ForexAnalytix account. I think it's definitely worth speaking to them. They can end up saving you money from what you're doing anyhow, which is trading, right, Stelio?
Absolutely. If you're trading, there's no reason why you shouldn't be getting something back, right? It makes sense.
And there is also no reason for you not to be at the right brokerage firm for the kind of trading you want to be doing, because Absolutely. It's different. Other people trade bigger amounts, other people trade smaller amounts, other people trade several trades per day, because they might be scalping, in which case they care more about other aspects of they care more about spreads, or other people just trade a few times per month. So it all has to do with your trading style as well, and they are the ones that can help you make the best decision for your trading style and your account size. Okay, so perfect. Stelio, anything else from the macro perspective before we go into the charts?
No, we're really on wait and see mode in terms of Europe and the UK and Italy. So we've had nothing. I mean, Theresa May had spoke to the to Parliament yesterday. She was a little bit more positive than expected, but really nothing, no news at all. So we're still waiting on this. So nothing more to report, I'm afraid.
Okay, perfect. So I think. Okay, Joe just let us know that his interview is now available on Real Vision. So he had an interview on Friday, if I remember right, with Real Vision, and it's now available. So those of you that have an account in Real Vision, you can go and have a look at Joe. It's Joseph Perry. You've probably already seen him on Bloomberg for ForexAnalytix. last time he was there last week, he very correctly spoke and predicted about the turn that we had in the markets. It was in general our thesis as a Forex Analytics team that the markets would roll over, and we even had a blog post that actually that was written exclusively by Blake. And before we go into the charts, I want to inform you that today, later on today, within a few hours, we're going to be releasing a follow-up blog post on that blog post. So what we think is about to follow in with the stock markets, specifically the U.S. stock market. So our blog is available for all to visit. It's a free place to visit. If you go to Forex Analytics, you're going to see there is a link saying blog here. This is the blog post I was referring to. U.S. equities and bonds may give the Forex market a hint, and there's going to be today, a version 2 on this follow-up. So I strongly suggest that you have a look at it. We're going to tweet it out once it's available and ready. So now let me begin by showing what I was saying. Blake showed it already. I was monitoring this this ascending channel in the Aussie Kiwi. Once we broke below it, it was obvious that that ascending channel was not that important because there was no direct follow-through. But even interpreting it as a triangle, it was obvious that the next move should have been to the downside, and that's what we had drawn. And we're currently testing this very critical horizontal support area. Actually, it's a triple confluence of supports because the 200 daily moving average, the 50% fib of the move higher, and this horizontal support resistance area at 1085 are all residing in this area, and we're currently about to break lower. You can even see this as a head and shoulders formation. Yes, the symmetry between the left and the right shoulder are not perfect. The right shoulder is more prolonged, but it's not that it's like so extreme. So even looking at it as a head and shoulders formation, you still could see this as an extra confirmation that a daily close below this 83 level is definitely going to be a very, very bearish development. Dale, can I mute you because we can hear?
You hear me breathing? Okay, yeah. Oh, and Stell, did you notice during May's speech, all of Parliament was laughing at her when she was, Did you see that?
I didn't see it, no.
Yeah, she said we're coming closer to resolving it, and they all burst out in laughter.
Yeah.
Yeah.
Well, let's see what happens, yeah.
Yeah, it's like, Trump going to the UN. There's no respect anymore.
Yeah.
In the world. And it's not just one country. It seems to be everywhere. Okay, that's the end of my homily. Go ahead, Steve. And Steve, you are getting a question on crude, and I'm selfishly looking at what you're going to do with it too. You're still holding the pip, right?
I'm still holding the pip, but as I wrote yesterday, that's why, as we've said many times, it's quite important. And it's very helpful if you are a Forex Analytics member, because, for example, yesterday, literally right at the lows, I wrote it in the chat room, I booked 1/3 of my short. Patterns in play are more indicative and educational, so they can't be that granular. So yesterday, though, I guided through people on the chat room. I told them that I booked my first third of my short position for 1.1% profit at the low. That, though, hasn't changed the fact that I'm still viewing this as a bearish consolidation, and that's why I'm still holding my pip, because I still believe there is a very, very high chance that we're going to see at least one more push lower, in which case I would be looking for a move. My target is at 70, but in all honesty, I think that tagging this 61.8% fib at 69.17 is a very likely scenario. That's why I have an order to take profits on 1/3 of my position at 70. But I will personally, if we get there, will be holding the last 1/3 of my position, likely for that area at 69.17. But I don't want to, jump forward to any conclusions. What I can tell you so far is that I like this price. yeah, I like this price action. This price action looks corrective. Anything can happen in the markets, but statistically speaking, this kind of price action like the one I'm seeing now makes me feel very good for a continuation lower. So nothing has changed.
Are you still holding a partial gold long position too, Steve?
Oh yeah, absolutely. I
Okay.
still have 2/3 of I still have 2/3 of my position in gold. This was the 4-hour chart, by the way. I still have 2/3 of my position left, and 1/3 I had an order to close at 12.38, which was my initial target, because on the daily
there today. Yeah.
Yeah, but to be honest, I've moved it a little bit lower at the 50% fib of discount of
That's
this
also
fib.
Steve. That's also equality within a buck from the first low at 1160.
Yeah, so I've moved actually. I've moved my the target to take profit on the second third at 12.34, and I'm gonna keep the other one, the last third, hoping for 12.52, which is the 61.8 of that last leg lower. So
Nice trade.
I still hold it. Thank you. It's working out very nicely. It feels good. So, and definitely, I'm not going to let it slip away. I mean, even if it reverses for some reason, because you need to be on your toes, given the fact that the medium to long-term trend has been lower, and that's something that when you trade counter trend, you should never forget. I mean, you should never forget the big picture, right? So you might be trading like on a shorter term scale, but you should also have a top-down analysis. That's why my cost average was at 11.99, and there is absolutely no chance that I'm going to let myself, not
just short term. Short term, you do see new highs. It'll be a 3, right?
Yeah, I think
okay.
I think we're gonna at least hit my second target, and then worst case scenario, the last third I'm gonna just book less profits if it reverses. But I do think that there is a very high likelihood that today my second target is going to be hit. Yeah. Let's see. Of course, nobody can.
I also heard, and I don't know if you could confirm it, that after this, to me it looked like a short squeeze once we got over 1208. That the COT hasn't changed. Shorts haven't capitulated.
No, not at all. At least the picture we have for last Tuesday, the close of Tuesday that we had on Friday, actually I think it was another record.
It was record, yes,
wow.
record short.
Yeah, it was another record short. Yes, exactly.
So plenty of fuel, or else we're getting near the end of this.
Yeah.
It's one or the other.
If you remember, I mentioned explicitly yesterday, Gregor was looking for this rebound to fail quite soon, and from a technical perspective, it is a very likely scenario. But as I told him yesterday, I'm keeping an open mind, knowing that we have record short positioning. Right. I'm keeping an open mind because if we squeeze a little bit higher, there is a lot of damage that can be done to the downtrend just by people that are going to be running for the exits, right? So,
thank you, Steve.
Yeah, so that's my point of view on that. By the way, I don't want to, let me see if we have any important questions, because I know that Andre is also with us, and I'm pretty sure that he will have a couple of things to show. Okay, I think we covered the. Okay, so having to do with what we talked about yesterday, nothing really has changed. Before I pass it to Andre, I mean, the stock indices are still consolidating. My viewpoint having to do with what I said yesterday hasn't changed at all on that. Same with cable. I know that cable is rebounding quite strongly, but I've said plenty of times, in my opinion, anything between 130 and 133 is purely noise. So, I don't want to get caught in that, chop. What was important for me was the inverted head and shoulders formation in the Kiwi yen, which Blake showed first, and, showing that there is an event about to happen in the Aussie Kiwi. I also want to say that, this rebound from the USD yen, which I know that Blake has mentioned several times, because there is also another trend line that he has been showing. even without that trend line, there is a multiple confluence of supports right here. So 111.50 undoubtedly is an interest of is a level of interest. So I think that if we actually finally break below that, there's going to be more downside coming, and perhaps there's going to be an acceleration to the downside. So let's see. Let me verify that Andrei's here with us. In which case, I'm sure that he's going to have. Oh, he says he's here. Oh, there he is. I found him. So make presenter. Yes. Hey, Andre.
Hello, everyone.
Hey, welcome.
Steve, how are you?
Welcome to the party. I'm good, mate. I'm good. How have you been?
Mr. Dale, how are you? I'm not sure if Dale is here too.
I am, buddy. Hi, Andre.
Okay.
How are you, buddy?
How are you? I'm fine, thank you.
Good. Good,
So
man.
can you see my silver
Yes,
chart?
perfectly. We can see your screen perfectly.
I don't know if you want to extend your position here, Steve. I don't know if you have any other chart to comment. I have just a few of them that I want to
Absolutely.
to give a
Absolutely.
fast. Okay.
You have 15 minutes, and show us whatever you feel better about.
It's enough. Two of those charts are have been already mentioned by you and by Blake, and this is an interesting chart on Aussie versus New Zealand. As you said before, we are now trading below this next zone, which I believe can force the price to fall from there. Just to note that retesting the previous structural lows at the default projection for the head and shoulder, we have also some eventual bullish cipher pattern retesting the lows, which can provide obviously a relief, a minimum of 38% retracement expected from there. So, but it's interesting because the market has been printing those heads and shoulders recently, not only on Aussie versus New Zealand. We have other instruments also facing those pattern behaviors or those price behaviors. Interesting. The other one is also another one that has been mentioned before. So it's New Zealand versus yen, which is approaching a bearish, one eventual bearish pattern. Let me check the 4 hours time frame chart. We are approaching now. We are now approaching the default shark pattern at 161.8 extension. It's synced, or I call it a cluster zone between, let's say, the golden ratio, the 61.8 and the 161.8 extension. So there's a box, and there's a default projection for the inverted head and shoulders. So synced or almost synced with that price level, which can provide some interesting pullbacks from that area. Obviously, I'm interested to see if New Zealand versus yen will retest the previous major or the previous structure support. I'm trying to push my rectangle here. I'm interested to see if they will put the price retesting this previous structure support. It's synced with an extended shark pattern at 224 extension, right a few points above the 78% retracement. So stay tuned on those levels. The market can eventually push from those levels. So those two charts have been already mentioned by our team here today. So another one that I want to show you is Euro versus New Zealand. Let me
doing the crosses today, huh, buddy?
A few.
Okay. The majors aren't offering much right here, are they?
We have in I believe for Euro versus dollar one eventual cup and handle information, but nothing strong. but eventually on in 2 hours or 2 hours, 4 hours time frame eventually. Euro versus New Zealand approaching also the default BAT pattern, the bullish BAT pattern of 175, 88% retracement. We are almost there. It can also offer some interesting pullbacks from there. Obviously, previous structure support needs to be respected when position our stop losses when trading those harmonic patterns. But it will offer for sure a friendly risk-reward opportunity to trade. Euro versus dollar, because you have mentioned, Dale.
Yeah.
Let me try to recover that chart. We have this, it's a small, lower time frame pattern or event, very close to the 50% retracement from all this bearish momentum, 50% retracement, the 168 extension for one eventual bearish shark at the reversal. I call those 168 extensions potential reversal zones, and we are now facing the 200 moving average also as potential resistance. Well, it is what it is. It's where the next pressure zone or the next advanced pattern will be printed, and obviously failing to hold there as a resistance. The default cup and handle projection will put the price or close to this descending trend line or eventual descending trend line as resistance. So, and the 224 extension and the golden ratio right below.
I noticed. Why did you start using a 2-hour chart? Just curious.
No, it's just I'm not using that specific time frame. As you know, I prefer higher time frames, but I like to see what is euro dollar developing during.
You get a different picture of the 1 hour.
Exactly, nothing more. Just to provide you and just to offer you or to share with you my view on that time frame. It's a smaller cup and handle. Usually the market will find support at 38, 50% retracement to form the handle formation. The market almost touched the golden ratio at 618 retracement, but we still in a bearish momentum facing the 200 moving average as potential resistance. We need to trade above this next zone or the cup in order to increase the probabilities to see the price moving further or above. But there's no. I'm waiting for. Eventually, I will wait for a retest of this trend line. This shark at 224 eventually will offer some more friendly risk reward opportunity for those who are trying to engage in a short on this instrument. But honestly, I'm not. I share with Blake his opinion, so I don't know what to do at this moment with this pair. I stay away. I have a lot of things to think instead of euro dollar.
Right.
You know?
Yeah. That's before you leave it though, could we pull back to 115.20 and that harmonic still be valid? If we got one more pullback from here.
Which one? I'm sorry, Dale.
115.20 on the euro. Could we pull back there and still have that harmonic be valid on the euro?
On a 2 hours time frame for the same time frame.
Yeah, the one we were looking at. Yeah, it was the last one. Could we pull back to where you have 23.6, 15.20-ish, and still have a valid?
I will invalidate this shape or this eventual harmonic if the pattern if the price recovers below this previous structure resistance. No, it's not here.
Okay.
If the price recovers below this previous structure, I admit, well, it will break the momentum. No?
The cup and the yellow bar above it makes it look like a shovel for So anyone who forces trades, there's a shovel on Andre's chart right there.
Yeah, eventually we will
bury our P&L statement.
yeah,
Set them on fire. What do you think of
we
that?
will create another pattern, the shovel pattern.
The shovel.
No.
We could we'd do some mining with it, Bitcoin mining. All right.
Let me just, you know, I know that you have interest on index markets still. Let me just go fast on those last.
It's okay. You know what? I think I have a no-show for a guest, so take your time. And someone, Stalin, you know, Stalin's in the house, and you can't deny a request from Stalin, or you go to the Gulag. All right. And he wants to know if you have time to take a look at Euro Pound. So
yes, I have time. Sure.
All right.
Let me try to recover that.
You don't want to be sent to Siberia by
of course
Stalin,
not.
right?
Especially for Stalin.
All right.
Euro versus pound.
Right shoulder down there.
Well,
I'm thinking we could get back to 840, which was kind of like the breakdown, but there's no harmonics there, huh?
There's no perfect harmonics because the market
broke down.
Is not trading there yet. The market is facing the 78% retracement as potential support, but I was expecting a few points below at 80% retracement, and that will bring in the default BAT pattern at 88% retracement. But sometimes the market will not respect those levels, and the 78% is also a strong fib level for potential reversals. And let's just measure a simple price action behavior. I'm not sure if you have the same metrical behavior here. Let's just. It's almost.
Yeah.
Usually it will require the 38% retracement. Well, I'm not sure if the price actually the price stays below the 38% retracement. Usually the price will search for that level. Actually, it's synced with previous structure support, so I will not be surprised to see the price Euro Pound retesting those lows before any decisions, but not before retesting those lows. But again, it can extend below and print that BAT pattern at 88% retracement below. But I prefer to wait, and if the market touches that level, I prefer to check market conditions on that moment. Yeah.
So you wanted to share some index looks with us?
Yes, I want to share because we have.
Are you in the blog? Are you in the Forex Analytics?
No, not yet. I will share at least one of them. I will try to put there. I want to start with FTSE because it's trading it's trading at the BAT pattern. 88% retracement for the BAT pattern. So I was expecting from above. Actually, I have tweeted that chart, that post today morning. I was expecting from here. This is the shark pattern, a 224 extension. Usually, it's a pattern that will search for the 50% retracement, and once the price touches that 50% retracement, I was saying, okay, eventually the market will sink, and it will print the BAT pattern. And today morning when I checked this shark, I noticed that they found support at 88% retracement, which requires a minimum. When I say requires, at least I expect, based on the probability for the pattern to work, I expect a 38% retracement as a minimum expectation. This is the daily time frame on FTSE. We have DAX. I have a PIP on DAX. Based on the same circumstances there. Nasdaq is also facing a bullish pattern, which usually will also search for the same fib level between the 38 and the 50% retracement.
That's what I'm waiting for.
Yeah, the market has found support at 224 extension, 200 minute average, moving average actually right below it, acting as a potential support. But I have already positioned my eventual cluster zone below. So if the market push into the 50% retracement, I expect then a new short event from those highs.
Right.
And if the market violates its previous structure, and obviously we need to wait for that, I will search for confluence between an internal and the external extension, which is the extension from this first swing and the retracement at the 50% retracement. But this internal extension, obviously, we need to wait for the price to retrace, because it needs to be adjusted at those highs if the price starts to bounce or starts to reject to trade above those fib levels. So I still expect some pullback on Nasdaq, and also my PIP also for DAX, obviously, which is trading nicely today. And this is Nikkei. Nikkei, it's a different scenario because there were two different harmonic patterns, very close one to each other in terms of Fibonacci extensions. The market has found resistance above, and then it has synced into the 78% retracement. Again, the 200 average acting as potential support there. I can see also Nikkei pushing a few points above. And S&P, we have this chart published inside ForexAnalytix for those who are subscribing. I was expecting this blue shark pattern, actually this blue crab pattern. Usually it will search for the 161.8 extension. This chart is published, was published from.
So you're what? It fell 10 points, 10 handles short, close enough for government work.
Yeah, and there's also confluence between the 113 extension for this brown or orange alternate bat pattern, kind of, because the market extended a few points above the default criteria to form this point here. But the market has found nice resistance here, and for those who are subscribing for ForexAnalytix, you are aware of this breakout for sure, because we have mentioned that structure breakout before that happened. So obviously, if you are subscribing our service, you are already familiar with that structure breakout. And it's curious because the market has broken very close to those harmonic, which by default will search for the same fib levels as always, the 38, 50% and the 61.8 retracement. As we can see, we are now trading the 50% retracement. Again, the 200 moving average right there. So S&P also in the same situation. And
so everybody, another great reason to become part of our family is Andre's work is outstanding, and he nails so many things. His pattern and play work has been outstanding. I don't even remember who you replaced anymore. How about that, buddy?
We just need to be here, no, Dale? I believe you agree. We just need to be here and to watch the market price action. And for those who are learning process, I believe they found this a difficult process to learn. But actually, time will make the trader. No, obviously we need to be dedicated to what we do.
Right. You not only have to be patient with the market, you have to be patient with yourself.
Patient with yourself, yeah.
Yes. I feel very impatient today.
Especially because people don't usually don't recognize himself inside the market. So we are used to live our lives outside. So we are not used to be disciplined inside facing the market conditions. So we are not, we don't face losses in our lives on a daily basis. So we don't lose our belongings, we don't lose our people, our families on a daily basis. So we don't feel comfortable losing, and especially losing money. So,
Right.
And when people start to face the market, that's crucial. They will face some losses, and most of the people don't know how to deal with it and how to fight back.
Yeah,
that losses.
It's all in our heads.
Yeah. It's all in our heads. Absolutely.
Well, great.
Let me just finish with
Okay.
this dollar, because yes, last week we were talking about this.
Okay.
Actually, I was talking about this edge and shoulder formation.
Yeah.
It was my neck zone here,
Yeah.
and this was my head. And I was saying, okay, neck zone again, and this was my right shoulder. So the market has violated the neck, which was actually an ascending neck. So usually we search for horizontal support or resistance zones for the formation of our for the neck formation. I was expecting that as an ascending neck. The market has violated the neck zone, found support, new highs, and I imagine a situation like a new or higher degree. Let me change the color here. A higher degree edge and shoulder formation.
Okay.
And
so now the neckline is 90.
The neck line is now horizontal,
Yeah.
an horizontal support.
Yeah.
Well, and just to show you this is my view for now for dollar index, with all the consequences aggregated with all other measures correlated with dollar index. So they will face eventually inverted momentums, especially for euro versus dollar. Eventually they will trade as a mirror. So and that said, well, Dale, it's my 2 cents for today.
Okay, Andre, what a great presentation. Thank you so much, my trading warrior brother.
Thank you too. Have a nice week.
All right, so you crystallized some things for me. I hope that Andre and the whole team did for you. That's our mission, to edify people, build up traders every day. That's our mission. Just want to remind people that if you're not happy with your broker, to contact Trent at Forest Park FX, and also consider becoming a part of the family outside of FACE, because FACE is over now. Looks like I have a no-show for a guest, which a little surprise. And you know, you could be going into the members chat room right now and see what Blake is up to, and instead of just being left to your own devices on your own after this webinar is over, or to use a technical word, terminates. So good turnaround Tuesday to everyone. Good hunting. See everyone tomorrow. Remember, don't just count your pips, count your blessings. Thank you everyone for your support of becoming part of our trading family. Appreciate you subscribing. I'll guarantee you one thing, that you're going to learn a lot just following all the great analysts that we have here, and you'll end up with trading tools that you could use the rest of your trading life. So see everyone tomorrow. You're very welcome, Tom. Take it easy. Don't force anything. Let it all come to you. Adios. Good hunting.